Wow, guys. S&P 500 near all-time highs. The market thinks that there's going to be peace in Iran. Let's look at the just Polymarket is amazing for this. 65% chance that we get a peace deal by June 30th. 65% chance we get peace in less than 3 months. So the markets are being quite confident right now, and that's why we have this big rally. That's why we have this big rally here. And this trend, this reversal has been so fast and so sharp that people who are trying to long, they're getting left out. You see gaps here, gaps here. Very bullish price action now. Honestly, in my opinion, though, this could very well be a short squeeze. You know, sweep the highs over here. Sweep the highs, maybe hover around the highs, and then start reversing, especially into these gaps, because sooner or later these gaps are going to get filled. There are buyers left behind at these gaps waiting to buy. So these gaps could act as support. But yeah, this looks like a short squeeze to me, because the market just kept rallying on bad news. Trump announced that the ceasefire was broken uh, a few days ago on the weekend, just this weekend, and then the market just rallies harder. So yeah, logically the market shouldn't be doing this, but or we you really don't want to short into this momentum. You see, everyone who's shorting here on the way up just gets completely wrecked over here. So we're probably gonna rally until everyone gets complacent and thinks we're gonna continue upwards, and then the price will reverse. So yeah, it's quite amazing to see oil down a lot as well on this news. Oil down a lot. So general risk on rally in the market. You can see dollar index has fallen below 100 here, which is usually a risk on signal. So your risk assets are rallying now. Yeah, big sell off in the dollar, which is what's driving this rally over here. Um, yeah, so very interesting. We'll have to see where this goes because it's still quite early here. So if we look at the S&P 500, we need to see how it's going to react once it gets very close to the all-time high. So far, no signs of momentum loss, but we'll see how it acts at the all-time high here. And if it starts pulling back, these gaps could serve as support zones, because when the price closed here on the Monday, for example, and then it opened up on the Tuesday, buyers who wanted to buy in this gap level have just been left down, sidelined. So if price does come back here, buyers could push it back up. Same with this gap and this gap. Eventually, gaps tend to get filled. So yeah, but we don't want to trade against this momentum. But at the same time, it's a bit too late to be going long here, since we're, you know, very near all-time highs. So S&P, we're just waiting to see the reaction at all-time highs. Are we gonna get a topping tail, massive selling, or are we gonna get acceptance in this zone? Okay, now for gold. So gold is also rallying on this news. Um, for gold, we are we've lost momentum here on this big rally that we've had. So we could see we're seeing actually in real time volatility compression. No one's really paying attention to gold right now, so I think it could rally more. But I'm looking at this 5K liquidity where this massive sell-off happened. It was like a 10% drop or so over here. If we if we see the price get to 5K, big psychological level, and people will start celebrating again and looking at gold again, and that's when you can see the price reverse here. As long as we don't get any closes above 5180, uh, we can form a lower high and still be in a downtrend here for gold. So I'm looking for shorts at this 5K level. And uh, yeah, so far though, same kind of story with gold as the S&P 500, but gold's just been a bit more stable. It's just it's just generally trending up here. higher highs and higher lows. I expect it to make another higher high here, and it can just keep going up until proven otherwise. And but I expect to see momentum loss as we approach this 5K level. If we dip down back to the yearly open from here, amazing level to long from. You can see massive buyers stepped in here, but it doesn't seem like we're going to hit that first. Seems like we'll get to 5K first. So yeah, I mean, you can kind of see on the lower time frames, there is a bit of momentum loss, although it's a bit early. You can see price making higher highs and RSI making lower highs, which means there's momentum is decreasing even though the price is increasing. But these divergences can take a while to actually translate into dips. So still early stages, but the signs are popping up there. And so yeah, if we go short, we'll short silver, which follows gold, but silver is kind of like leverage gold. So yeah, and silver's been weaker. So yeah. Now for we'll go to Bitcoin. We'll have a quick look at Bitcoin. So Bitcoin's actually been quite interesting because while all this craziness has been going on in the other asset classes, Bitcoin is was being very low volatility and no one was paying attention to it, but it's silently been creeping up. So I've removed my range tool and I think we're in an uptrending market now on BTC. It's quite clear. Higher, high, low, higher, low, higher, low. Higher high, higher high, higher high. Seems like we're in the process of forming a higher high here as well. So we are gonna look for longs on another uh, lower high here, anywhere above, let's go down here. I mean, anywhere above 68K would be good. So we might form a new high here and then retrace. So on the Trump ceasefire news, we did, yeah, over here. We did dip to 70K. So that's the kind of level we're looking at. And then like massive impulse up once the stock market started going up. So for Bitcoin, we're just looking for continuation longs. And also we're looking at these extremes here where if a crash does happen, we're gonna long on the daily imbalance. An imbalance zone is simply a zone where uh, buyers really outweigh sellers or sellers really outweigh buyers. So you see, as soon as the price dipped into here, loads of buyers just stepped in to push the price back up. And we're also looking at this liquidity here where this wick is and this massive selling occurred through here at 80K. Also aligns with this weekly candle high over here on 2nd of February, which we've been trading inside between 79K and 60K. But these are the extremes we're looking at right now. So yeah, you don't want to diddle in the middle. But close above 74.6K, another daily close. Uptrend continues. So, Bitcoin silently creeping up and yeah, we'll have to assess this level by level. Now, oil is actually quite interesting because if you go to the lower time frames, it's an absolute disaster. On the lower time frames, we've mentioned this before, it got up to this imbalance zone over here and just complete pandemonium occurred. Biggest massive sell-off, I think it was like 15%. 15% massive sell-off. If we just go to our price range, 22% sell-off. Wow. In a matter of hours. 22% sell-off. Tries to recover, but makes a lower high here and is breaking down again. We'll see if it holds at this 200 EMA here on the 4 hour, but doesn't look like it. So fast trend for oil has officially ended, but on the higher time frames, it is still in an uptrend. it's still in our uptrend as long as we don't close above or below $88, because you can see here we still are getting, if we're just looking at the closes, we're still getting higher lows over here and higher highs. So anything here will look too long because uh it's a bit of a weird one. Like let's go to poly market here. Uh, Strait of Hormuz traffic returning to normal in April. It's only a 23% chance, which is quite low. So as long as the Hormuz traffic, get out of the way. As long as the Hormuz traffic is compromised, as long as Iran is still charging tolls, and actually I've heard the US is starting to charge tolls apparently, which is gonna restrict the traffic even more. There's gonna be a price crunch on oil, upward pressure on oil price, because less of it is able to get shipped around the world. So, as long as that's going on, I don't see why oil would have another big dip. If we look by May 31st and June 30th, the chances are much higher for the Strait of Hormuz to be opened. So that's probably what the market is pricing in now. But from everything I've heard, I don't see why this would happen because JD Vance said that we weren't able to reach an agreement. Iran refused to uh, engage in or to commit to stopping their nuclear program. And also, the Iranian officials have also said that no compromise has been reached. So I don't know why the market's being confident of a peace deal here. So I'm very skeptical of that. Yeah. So we're going to assume that we're still in our uptrend for oil. So we're looking for longs, but the fast trend has ended. So if you look at the blue line here, uh, longing on this these 10 and 20 bands over here as well, over here, no longer works. But we can have deeper pullbacks and still be in our uptrend. So yeah, just very skeptical of I believe, this war will continue and escalate. If you know your history, then I think that's quite obvious. The US doesn't seem to be willing to make peace. They're giving Iran all these unreasonable demands. But yeah, anyway, yeah, so that's all of our assets covered actually. But the macro also just for S&P 500, which is kind of driving the market right now. Even if we do make new all-time highs, it could just be a sweep. The macro does look really bad right now. The key is inflation. So, oh, my notification disappeared. Give me a second, guys. Oh yeah, also you can follow my LinkedIn over here. I post on there as well. 4% PPI. Klobesi letter. Okay, my LinkedIn's just stopped working, guys. What is this? Guess we'll have to go. Alright, fuck this, guys. We're using X. What is most recent PPI rate? So what the PPI is, it's an inflation rate, but it's inflation for producers. It's inflation for producers, year over year. Yep, it's climbed up to 4%. Now this is getting in really dangerous territory, guys. Like, uh, if this inflation is this high, then the Fed just can't cut rates. And these whole recent years, the market has been going up because it's expecting rate cuts. So if we have high inflation and no growth driver, we don't have QE or anything, then, you know, how much further can the market keep pushing? It needs liquidity. So I don't think even if it does make new all-time highs, it'll go too much higher. Surely markets sooner or later, the longer this war goes on, the less confident the markets are going to get because inflation will stay sticky because of the oil price. It's all in the oil price. But until the stock market shows signs of rejections, we don't want to trade against that. So on the longer time frames, I am still bearish on risk assets like S&P 500 and Bitcoin, but with this big momentum, you don't want to short into it. You don't want to short into that. So that's the market update. Thank you for watching, guys.